Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So yesterday the European Union has brought some actually important changes in the sentiment of the market concerning the euro currency. So actually, as you know, inflation in France and Spain was stronger than expected, and that actually has raised market expectation of the European Central Bank steps. So now it is widely suggested that the ultimate level, the terminal level, will be somewhere around 4%. So if previously it was suggested around 3.5, 3.75, now it's around, expectation stands around 4%. And the period of the long-term rate, of the high rate standing, also have increased. So in the nearest time, investors are not expecting any rate cut from the European Central Bank in the 2023. So now the expectation stands only for 2024. But this is not all news. Second news is concerning the quantitative tightening. So as you know, European Union has started, or better say, Central Bank in Europe has started the quantitative tightening since the 1st of March, yesterday, and supposedly it should be around 15 billions per month. So with a slow acceleration close to the end of the year. So it means that European Central Bank starts trying liquidity, some loading off the balance of the central bank. Additionally, as you know, currently the commercial banks are returning back loans have been provided during pandemic. So in January it was around 300 billions been returned by the commercial bank to the central bank. So it's going currently significant drying of the liquidity. So drying of the liquidity always leads to rising demand for the currency. All the steps together, we have mentioned all this stuff in the Telegram, as I usually trying to put it to give you the update and actually provide important news. And that explains why yesterday euro currency performance was a bit stronger rather than on the other currencies, because on other markets actually we do not see so strong action. And actually if we take a look, for example, on the Great British pound and showing downward action here, if you take a look on the Australian dollar that we talked about, it shows no signs of bullish performance. So yes, it was minor performance here, but in general overall context remains bearish. Market showing some flag consolidation, while on the euro currency you can see that action stands a bit stronger. Here we have the turning trend in a bullish direction, and from the technical point of view, what conclusions could follow? First of all, we haven't got any grabber here. Currently, I wouldn't deny the OP target yet. It's just because overall action looks not very strong on the lower time frames, and the ABCD pattern is still valid. If market will take it out of the C point, in this case it means that OP will be erased at its first moment. Second, which is more important, is that we could get on a weekly chart not the bread and butter, but the double repo sell. So market first could keep going higher, return back to the top, and maybe after that we will get some reaction to the downside. So it might be double repo pattern formed instead of the bread and butter. But this is just suggestion. So it doesn't mean that it definitely will happen. We need to keep an eye on, because currently it's a bit early to speak about this, as ABCD pattern is not erased, and actually we suggest that market could keep going slightly higher, but I think that chances on reaching OP still stands more probable that we will get sharp reversal in upward action, because on the Fed policies, you know, it's also suggests a bit stronger tightening. Big banks expect high interest rate by the Fed, so now everybody starts speaking about the 6%, and if this some kind of the status quo remains between the European Central Bank and the Fed Reserve. So we will see. But in general, as we also mentioned in the Telegram yesterday, for example, ING Bank suggests that for the euro currency, 105 probably will be the bottom for the nearest term. So they do not consider that section will be lower. We will see. So what we could do in today's trading session, today, tomorrow probably, on the fall time frame chart, take a look. That's the ABCD pattern that we have discussed recently. So our suggestion, as you can see, was correct. Indeed, market has shown the upward extension. And, well, the target that we have specified around 106.70, 106.75 OP has been touched. At the same time, as I mentioned in a forum later, that currently it would be better to not consider taking the new shorts by far, despite that we see the completion of the OP. It's just because CD lag, as you could see, significantly faster than the AB. And with this performance, we suggest that market easily could keep going higher and complete the XOP around 107.45. In general, you can see that these two targets together with the confluence resistance create some solid cluster of the resistance. Since the fact that the XOP actually stands slightly above the confluence is not the problem. So market could just keep going higher, complete the XOP, and you could treat it together. Confluence with this slightly higher standing XOP target. This is the solid resistance area. That's why if you would like to sell, you consider, say, taking the short position, that's an area that you could keep an eye on. And will be actually the last opportunity to go short, just because take a look at the XOP very close to the daily C point. Wow, this big ABCD pattern, right? So if market will somehow just keep going higher, the C point will be erased and the downside context also will be erased. But for now, that's an area that we still could consider, because it just could be completion of the retracement, and this market could show some downside reaction. Whether it will be down to the OP, it is a difficult question for now, but the reaction from the XOP probably should happen. As you could see, it now is going from the OP. By the way, if you still have taken the position yesterday, so we are probably you currently have some good result and you could decide what to do with this. But keep in mind that with this acceleration is in most cases as a rule, so market follows to the XOP target once it has the acceleration on the CD leg. Speaking about downside pullback, so on the hourly chart, here's what we have. Wide confluence support around 106.13, 106.30 is an hourly chart. And we have few extensions that stands mostly around the 106.30 area. First of all, we have the ABCD with the OP around 106.28, creates an agreement with this level. And here, if you drop your time frame to the 15-minute chart, for example, you easily could recognize the butterfly that is forming here. It has two extensions, 106.33, that mostly already has been tested. Next one is 106.21. So if you would like to take the long position, well, probably you could try to get more insurance with the stop loss placing somewhere below 105.90 area. It's below the XOP. But I suppose that, well, taking into consideration the way how market is dropping, so we would not see any sharp drop. It's rather slow, gradual, so I think that this level will be enough for stop hiding. Hardly it will be dropped lower than the butterfly 106.21 area. So somewhere in this level, in this area, market should stack probably, and could try to reestablish upward action. So that's our suggestion currently on euro currency. So let's see what will happen.